Hello, everyone, and welcome to our episode 5 of the Harmonic Pattern Mentorship. All right, so this is episode 5, and this is a new recording. And if you've been following up with the Telegram community, I made an update that I had a little injury on my right hand, and I already had the Harmonic Pattern episode 5 pre-recorded. Unfortunately, something else happened, and that video is no longer available. So I'm making a new recording, and thanks to God, on that particular video, I made a pre-recording. So it was not actually a live market analysis using harmonic pattern and SMC. But on my analysis this morning to update the community, I found this beautiful setup on NZDJPY, which I already sent to the community. But I made analysis with it using smart money concepts. Then I was able to spot this Gartley pattern, bullish Gartley pattern forming here, which is actually a good example and a good format to be able to make a new video for episode 5. With that being said, our episode 5 is mainly talking about combining harmonic patterns and smart money concepts. Okay. So we're talking about going further into using harmonic patterns for smart money traders too. And if you've been following up with the previous episode, on episode 4, we talked about the Fibonacci ratios. So you'll be able to understand these stuffs, and why we have them here. And then on the episode 4, I showed you a practical example of how to get this tool on your trading view, okay, which is available here. So you could check that out if you don't know how to do those stuffs. And episode 1 and 2, we made a basic introduction to what harmonic patterns is all about, and why we are currently studying this method, or why there's a mentorship on this particular program, okay? So on this episode, we're looking about how harmonic patterns can be applied to smart money concepts, and basically how we can do about it with our daily analysis. And on this particular analysis, as you can see here, I'm just simply using harmonic patterns on smart money concept. It's very easy to use. So don't expect the further episodes to be very long, because these are going to be very simple breakdown for you to understand. The complex aspect is within episode 3, where we talked about Fibonacci ratio. So you could look that out so you could get a further insight to how these stuffs work, because it's fully automatic. Like, it's an automated program when you're applying these patterns on your chart. So all these stuffs are set. You just have to know the meaning of these stuffs, and then you can draw your pattern easily. All right. So on this particular analysis, we are having a bullish swing structure here. As you can see, price cleared at multiple lows, which is clearing out liquidity within premium of this range. And then we had a change of character here. Now, the change of character prompts in a new internal structure, which we can see over here, which price is currently mitigating. But that is if we're looking at it from smart money concepts, right? So we can see there is a structure here, and price is currently moving within that. And that is the internal structure of this bigger range. Don't mind my hands. I told you guys I had a little problem, so it's a little bit difficult for me to use my hands right now. And from episode 4, what I made mention to you guys was that smart money concept and harmonic patterns are very good combination. It's also a very good combination with Elliott wave, which I think we might have an episode on that in the future. But one of the main things you should understand is that harmonic patterns gives you insight on the internal structural reversals and where you should expect mitigations and reactions from. So on this aspect, if I was to use smart money concept, I would say this is a mitigation, okay? But this is also an internal trend line, right? So what we'll do is that I'm going to make this invisible, so we'll be able to understand what we're doing with the smart money concept. Then we come back to looking at it from harmonic patterns to see what we can, okay? All right, so looking at this, I would say this would be trend line. According to the analysis I also sent to the community, this would be internal structured trend line. And that's because we are currently within this range, right? So this would be the internal structure target to create a new higher high. Why this would be the external structure target to create a new higher high. So we're saying basically price going above this high, we might still see a retracement. It's still possible. That doesn't mean price is bearish. Price could still be bullish, because the overall structure on the swing range, we're expecting something like this. All right. So this is an internal structure target, while the overall target is still bullish. And while we're looking at this other block as a new area of interest, we should also be aware that there's a trend line forming below it. So this would be our major demand zone based on the swing structure. So if you're paying attention to this, you should be aware of this as well. And this is also where the harmonic pattern, confluence comes in. But at the same time, if we're looking at this from SMC perspective, we should be expecting price to create a new higher high, before price comes back down. But harmonic pattern is also giving an insight, let's say, that price could also not clear out that high before testing this. And I see that as a possibility as well, because that could mean this would be a weak low and also a much bigger confluence to saying why this should be cleared out and price should mitigate this. Okay, so as you can see here, it's a perspective that was just brought into the picture by harmonic patterns, just by paying attention to harmonic patterns or just knowing how to apply those tools. And one other thing you should understand about harmonic patterns is that the patterns itself, from the bat, Gartley, butterfly, they're not different. They're just different Fibonacci ratios. So if you don't know how to calculate the Fibonacci ratios, it's not going to be that difficult for you to be able to place them, correctly. You don't have to say you're specifically looking for a chart and you're looking for a bat, or you're looking for a butterfly, or you're looking for a shark. You just have to make sure that what you're aligning is basically not an illusion, but also insights from the analysis you're trying to make. Because once you get delusional, that's where the mistake comes in Forex trading, because you start highlighting things that are not even there. So let's try to be more realistic. The patterns are not things you should stick to. The Fibonacci ratios are things you should just be aware of. And when we say Fibonacci ratio, nobody is saying you should be very strict and saying it has to be a certain number. Basically, when you look at it and you say you're looking for 0.61.8 Fibonacci ratio, or let's say 61%, and then you're also looking for that particular area on the chart when you're basically seeing that price is currently testing the 50%. So those are minor mistakes that comes in because you become too strict to rules and you're not willing to become flexible. Understand that this is the Forex market. It's not based on your rules. It's basically based on the financial influence and, data coming in. So anything can change. So don't stick strictly to the Fibonacci ratios. Just, be able to understand why those Fibonacci ratios are significant. So when you see a different figure, you know that it's as significant as the other one. It just has to be, on a certain position for you to find it valid. Hopefully you understand what I'm trying to say. And then back to the chart, what we're looking at here, we're saying from these insights we've gotten from the smart money concept, looking at it from harmonic patterns also make a lot of sense, because the prediction now says that we're expecting this to be a weak low and also price to, keep this as liquidity, inducing traders to think that, once price goes below this is a break of structure here and every reason for them to buy from here, and then the price continues in the direction of the swing structure and we find out that something like this happens instead. Okay. Don't mind my drawing, please. And that's what we have for Eps.5. As you can see, harmonic patterns is not that complex when it comes to trading it with smart money concept. But when you're going to the chart and you're neglecting market structure, you're neglecting inducement, liquidity, all of those stuff, just because you feel like certain patterns, like harmonic patterns, are um, divine, or they're able to give you the direction of the market without any confluence. That's where you get problem. Okay, most of these concepts and models are built to help you gain insights. It's basically to help you further your understanding. So it's not for you to stick to just them. They are supposed to be confluence with other methods. All right, so just use this as confluence, mainly when you have complex situations like this and you're paying attention to just this other block. It could give you insight to why a stop hunt can happen, and it could also give you insight to why you should be risking low on this particular area of interest. And this will be all for this particular episode. I'm trying to make it shorter, so we can be able to process through the mentorship complete. And for those of you who are not familiar with the Telegram community, we do have a community on Telegram where we share chats and ideas. You can join us for further, insights on what to do with your analysis. And if you're a beginner, you could also get guidance from those who have been here for years. And that will be all for this episode. I will see you on the next episode. And also, we have an event coming up on the 7th of July next month. And it's going to be for 7 days, basically from the 1st of July to the 7th of July. And we're going to be talking about sources, basically, other aspects of trading outside just technical analysis that a trader needs to be aware of to be able to understand and scale through the Forex market. We'll be having 5 guests, and these guests are already on board with us, and we're all doing this in a very, very moderate and cooperative way. So I will hope to see you all there, and we could have a good time together as traders to learn new things and also expand our narrative and perspective to how we view the chart. I'll see you on the next episode. Bye.